The other thing that, we're certainly pushing towards at Real Vision, and I think will happen, is like this whole market of hedge funds, which is basically investing in people who have excess talent in managing money in whatever markets. And what we're seeing is that you can basically prove somebody's abilities in a community. And then if they tokenize it, I can tokenize Sandy's trading portfolio. Right now,
Yeah.
Sandy's a hedge fund manager and gets paid, which is incredibly disruptive considering the hedge fund industry is a $4 trillion industry. And suddenly everybody can essentially become a hedge fund manager. And that, again, puts the power back into the people as opposed to these lumpy, complicated corporate structures to make it super easy.
Well, and you and I, right, we both have hedge fund backgrounds. And so, really, what is a pod structure for a hedge fund, but a platform? It's really just a platform play. And if that platform becomes something that you can offer out um, in general, right, there's a huge opportunity in that. I will say, though, the one piece that I do think about, because as you're exactly right, you can find all sorts of opportunity and anyone could really become, in part, a hedge fund manager. One of the things that do make these platforms very successful is the way that they allocate capital at the top level from a risk perspective. And that is probably where hedge funds, the future of hedge funds may lay. They may lay in that risk management layer that sits on top. And then all the talent that feeds the hedge funds could become almost open source.
Sandy, it's all going to be AI. The asset allocation. So if there's a basket of 1,000 traders available and you train your AI on it and say, okay, this is the kind of risk profile. Can you build me a portfolio of everybody can become a platform. And we don't
Yeah.
need Izzy Englander to be worth $100 billion or $200 billion to do it, because it can be done by AI for almost zero cost.
Yeah, but then there's going to be, maybe Izzy Englander can build a better AI, right?
That's true.
than someone who hasn't really had that experience. And then the hedge fund becomes the strength of their AI algorithm, and that becomes the platform, right? But I think your point is perfectly taken. I think that, though, there is skill, right? We know that there is amazing skill in being able to invest, and that skill is becoming increasingly decentralized, and we can be sourced very differently. But in the end, there still needs to be skill that builds these algorithms and trains these algorithms that to really be able to do this. And just like people are better or worse at it, my guess is that algorithms are going to be better or worse at it as well.
So the other side of this whole equation, we've kind of talked about moving this industry on chain. But what about moving the assets into crypto? Where are we with that? Because you're also involved in that whole thing as well. So where are you with all of that, with seeing what kind of demand is coming, what kind of products are needed? Yeah, what's happening with the institutional investment with crypto?
Yeah, so I think institutions are investing in crypto. I think that this is one of the reasons that, some of the trading patterns feel very different now than in other cycles, because institutions are investing and institutions wait for market dips to buy, right? Institutions don't typically chase markets higher. And so you get this pattern of kind of higher lows, but not always necessarily big breakouts. And so I think that, in the altcoins, sometimes that volatility gets a little bigger because they can kind of wait for their entry points
And they're
and
less involved with
have it.
alts as well.
That's right. And then I think in Bitcoin, right, which is probably the most liquid, you're seeing that, this pattern of higher lows keeps happening, and that will eventually create the foundation for, a move higher. But institutions don't drive markets higher in the same way that retail participation does. So I think you're already starting to feel the impact of institutions in the crypto markets. I also think that, with more regulation coming into place and more regulators looking to create clarity around what is a security, what isn't a security, what is a commodity, what is a token, I think that there's still some fundamental questions that need to be answered, and maybe some redesign that needs to happen, right? Because a lot of these blockchains use their native cryptocurrency to drive, volume, right? And to try and make the platform ever more profitable in terms of how you purchase block space. right? So as I become more successful, there's more demand for my tokens and more need to use those tokens to actually feed the transactional volumes that we're creating. But we also are using those same tokens as the investment vehicle into those platforms. So the hope is that the value of the token goes up because we want it to be an investment exposure. But in reality, the value of that token should go down as the volume grows because it's helping to drive volume.
Yeah,
So
it's
if
really
it goes
hard,
up
this
too
thing,
much,
because the more successful it is, the least attractive the block space is because of pricing.
yes.
So it makes it really difficult. It'd be interesting to see how that resolves over time.
Hey, thanks for sticking around to the end. Look, if you enjoyed it, hit the subscribe button and check out the video here on the right-hand side. I'm sure you'll enjoy that one as well. And if you're ready for more, go to realvision.com/join. I'll see you there.